And I'm joined now by Dan McDermott of thechartguys.com. Dan, hello, how are you?
Good, glad to be back. How you doing, James?
I'm well, thank you, except I'm very bored. There doesn't seem to be much going on in the markets today. I can't find anything to buy, sell, short, or invest in. How about you?
That's basically where it stands, and that's why I've been looking at other sectors, gold miners, and a lot of interest there as far as volatility goes. But you're absolutely right. There's a lack of clarity, and the MJ sector has been boring, essentially. I do the videos every day, and I'm running out of things to say because I'm repeating myself as a broken record. We're in downtrends. There's no shift for the bulls. Slow and steady pullback. Have to be cautious of the trade war and the S&P 500 correlations. And we're just patiently waiting to see if the fall seasonality shift can lead to a sector shift.
Sure. I too have been repeating myself continuously in my morning note as well as on our show. But, you know, key themes that I am sort of watching, and I'm sure you are too, is, you know, the cannabis sector generally has become highly correlated to the S&P. There's not a healthy S&P, there's just no game in the cannabis sector. And I think in the context of the trade war, you know, watching the dialogue that comes out of the administration where one day it's pro-China, the next day it's harshly anti-China, and then the next, even in the same day, it'll be back to pro-China, and then, you know, you get the sense that there's a conciliatory tone and then an antagonistic tone, and that seems to perfectly mimic exactly what we're seeing in the S&P. And do you think that is closely correlated as well, that what is being said at the G7 summit and in the media up between China and the US is a reflection of what we're seeing in the S&P?
Oh, absolutely. And honestly, the pattern in the S&P 500 the last 2 weeks is exactly what I would expect it to be, just as far as I've said it many times, but the equilibrium and tightening range. The difference is the speed at which the pivots take place. So Friday, when Trump comes out and says, oh, well, we're going to retaliate to China, and I'll tell you more about it later this afternoon, the market has a free fall dump. And that happens really fast. But looking at the daily time frame, as I'll show you in just a minute, that is what we would expect with just a higher low, lower high tightening range. And to the end of this week or early next week, that tightening range is going to break, and it's going to dictate momentum for September, whether if it's a bull break, we're looking back at all-time highs in the S&P 500. And if it's a bear break, we're going to see that fear spike again. And we're going to be looking back down really towards the December lows as key levels. If you'll remember the December dump that was so brutal, that will be back on the table if we break these August lows.
Sure. Do you think that the sort of the inclination and the momentum towards continued quantitative easing or a resumption of quantitative easing in the case of China and lower interest rates to the point of now, you know, $17 trillion in global debt is negative. Do you think that that is going to have an effect on the S&P one way or the other if that trend towards increased liquidity and deteriorating interest rates continues?
For me, I'm just, in the short term, I'm watching the balance of can the positives from that the market perceives from rate cuts, can that outweigh the negatives of the trade war escalation? That's really the balancing act that's going on right now. As far as the longer term, you know, I like to look at my dad as a potential gauge. He's a baby boomer who's just had to, you know, put your extra money in the stock market and let it ride out. I mean, he sat through 2008 and he sat through every pullback of the last 30 years. But now he's starting to get more conservative and he's starting to take more money off the table because he doesn't have the time on his side to be able to ride out another, you know, decade dump and bounce. So I think what the baby boomers do with their portfolios is going to have a significant impact as to whether this, you know, whether the S&P 500 can keep this. Essentially, it's been one big move since the bottom of 2008, and that's now pushing 10, 11 years old. Can that keep up? And will the baby boomers be moving their money to more conservative investment strategies?
Mm-hmm. Okay, so what about the cannabis sector now? If we're reliant on that S&P 500 for at least stability before we see any interest, I question that relationship as we move towards the end of August because, you know, with all of the earnings coming out being uniformly disappointing in the cannabis space, it strikes me that even in the case of a healthy S&P, that the cannabis sector might continue to sell off if the earnings continue to be disappointing. Is that the way that you see it, and is that being reflected in the bellwether cannabis stocks?
It's definitely possible. And like you said, earnings are getting more important as far as what they do with price. As the euphoria has worn off from legalization in Canada, the earnings are now important, and that's what everybody's looking to. So it's really just a question of, can we get, or honestly, I'm looking for the catalyst. I'm looking for the catalyst from the US to be a shift. And it doesn't have to be full legalization. If we get the States Act or the SAFE Act or something that reschedules marijuana off of Schedule 1 and opens up the floodgates for banks to work in the space, that's the catalyst that I'm looking for. Some companies have come out, I believe it was TLRY, they came out and said they expect it in Q4 2019. I'm not going to hold my breath, but honestly, I am going to, as personally being a trader, I'm going to not be going aggressive in this space until we get that kind of catalyst. And honestly, I hope the S&P 500 has stabilized by then, because it's the kind of thing where the Canadian space ran up so hard with so much euphoria into legalization because the S&P 500 was at all-time highs as well, and it was just a double whammy. Whereas if we were seeing weakness in the S&P 500, yes, the sector would still be going up, but it would be much less bang for our buck. So essentially, I'm just holding out and hoping that when we do get the catalyst from the US side of things, which will impact the Canadian side of things as well as companies start to, reach down across the border, but can that catalyst occur in a favorable S&P 500 environment and give us the home run that we're looking for?
Right. All right, Dan, let's take a look at some of your charts.
So first chart we got here is the S&P 500, and here is the tightening range that I was talking about, the equilibrium that comes after volatile breaks of ranges. So we had the volatility dump back at the start of August. We hit our low. We hit the high of the bounce from that point. We held the low of support. We rejected from the high. So this is what I was talking about, where Thursday and Friday, I wouldn't be surprised at all to reject from resistance, and because we couldn't break that level, to see a pullback back into the middle of the range. The difference is it happened all at once with a huge red candle due to the trade war escalation. So now we're looking at a higher low to form. So it's still just this tightening range pattern, and certainly what was expected. And the break of this range is going to dictate momentum into September. So here we are trading just at about 287. The middle of this range is in the low 288s. So we have a slight bear lean because we're a little bit below the midway point. But we could stay within this tightening range all week and then look for a break of this either end of the week or early next week. Like I said, if we break bullish, all-time highs are right up there, and they'll be less than 3% away at that point. And if we break bearish, we're looking down at the low of June and then the low of December as really the major levels. So how we come out of this range that we've now been trading within pretty much all of August, that's going to be key and critical, because if it's a bear break, again, that's going to spike fear in the market as a whole. And if there's fear in the market, the high risk, high reward sector of the marijuana stocks are not going to be looked upon in a positive light. So looking at CGC, I think the short-term direction of the sector is going to be dictated by this oversold bounce. And I do have a position in CGC looking for this oversold bounce. I'm just looking for a bounce to a daily lower high. Every single bounce that we've seen since we topped out at $52 back in April has just been a lower high and has been followed by lower lows. So I'm not looking to change any trends. I'm not looking for any major moves. I'm just looking for the short-term selling pressure to subside, for bearish exhaustion for everybody that's going to sell or go short from the earnings reaction and the negative articles that come out after that, for that to all have already happened. Now, who's going to be left to sell? We get to a point where the selling pressure subsides and the bull bounce gets going. So I'm just going to be looking for a bounce to the upper $20 range, even just looking up to $27, $28 for a short-term bounce. That is what I'm going to be looking for. And then my game plan from there, I can either take short-term profit or set my stop loss at break even, where if we do set that lower high, and then if we were to fade down, here's our little bounce. If we set a lower high and then fade back down and drop to a lower low, I would have zero risk if I get stopped out at break even. I've yet to determine how I will play a bounce. Step number one is getting the bounce going, and that has yet to happen yet. Every single day is a lower high the last 9 days in a row, and we certainly have to see that pattern break for any kind of meaningful bounce to take place. So looking at VFF and APHA, these are two names I want to highlight real quick. The reason being the weekly timeframes are leaps and bounds ahead of potentially changing the trend comparative to their peers. So we pull up the CGC weekly chart, and it's just a straight drop. We know that the next time we bounce on CGC, any meaningful way, we can bounce 20% on CGC and still just be looking for a weekly lower high in the longer term downtrend. So looking at VFF, we already had a major weekly bounce, and now we're looking for the weekly higher low. So to see the trend change take place, it's the bounce, it's the higher low, wherever that forms, and then we have to see the higher high to get the weekly trend change. And anybody in the sector needs to see a weekly trend change for us to say, okay, the longer term momentum has shifted and we're now back in uptrends on the daily and the weekly time frame. It's been a long time since we could say that, but that's what's required. So VFF, already looking for its weekly higher low to form, is leaps and bounds ahead of CGC, who would still have to bounce, set a lower high, and then pull back and see a higher low. So really it's 3 or 4 weeks in front of, or I should say it's a 3 or 4 week more developed attempt at a weekly trend change, which CGC is starting from square one to try and see, whereas VFF already has 6 weeks under its belt of this bounce and now higher low. And APHA, thanks to the earnings reaction, is in a similar boat where we have the low, the high of the bounce, which was just a lower high from previous price levels, and now we're trying to set this higher low. And if the bulls can hold 583 and break 760, it'll be a weekly trend change, which again is very meaningful in this sector to show a shift in the longer term momentum. And if APHA or VFF can pull that off, technically speaking, they'll become the leaders of the sector for me. And that's who I will be watching as a gauge of strength because their charts will be the strongest. One other thing I want to point out today is something that happened with correlations. And I want to talk about the US MJ sector and the Canadian MJ sector and uplisting and higher exchanges. So when you're traded on a higher exchange like the NYSE or the NASDAQ, correlations are much more prevalent because there's automatic trading, there's bots, high frequency trading. That's rampant on the NYSE and the NASDAQ because of volatility, volume, liquidity, market makers. On the OTC, which is the lowest tiers, penny stocks associated with a lot of scams, and there are a lot of scams on the OTC, you don't have the big money investors, you don't have the access to capital, you have less market makers, you have less volume, and because of all of that, you have less activity from algos and bots that are trading. So an example is CGC this morning. We had a news alert come out that says the DEA is expanding its research into medical marijuana, and this is 2 decades too late, but they're expanding their research, basically. So on the 5-minute time frame, and I actually lucked out here because I was bottom fishing the low of Friday, which means making an entry just above a key support level and putting your stop level just below it. So I entered at 24.50 and I put my stop loss at 24.35, risking about 15 cents below the low of Friday. The timing of the news was perfect because we held the low of Friday with a double bottom and then ripped real high, or ripped much higher, and that was just perfect timing as far as holding support. But what I want to point out is the huge volume, and if you look at ACB, APHA, TLRY, Cron, everybody, when that news hit, saw this move. Maybe not the same size, but saw the volume spike and saw the bullish action. The reason being, all the algos picked up either on the headline or they picked up on CGC. Let's say, there's a bot. I'm trading Cron with a bot, and I say, okay, if CGC does this, then I want my bot to buy this. And so it's feeding off of not only the headlines, but what its sector peers are doing. And so, like I said, everybody saw a move right here. If you go to the US space, you don't have that correlation because you don't have the bots trading. So that move time-wise, that spike occurred, really we could say 10:15 is when that really got going. And if you look at the US here, this is Cura, the bounce started at about 10:30, and it wasn't a very meaningful bounce, but you can go through and look at a lot of individual names and just see that the move was a bit delayed. Any little bounce in green that we saw was delayed. So there's 2 takeaways here. Number 1, don't expect correlations to be significant, but number 2, we can potentially act on that. If we get significant bullish news, this wasn't significant bullish news, it was nice bullish news, but I'm talking, significant bullish news. If we see that happen, whether it's on an individual name or federally speaking or whatever, there's a lag opportunity to play the USMJ space because, again, those bots, if you try to compete with the bots on the NYSE and play a laggard, there's not many laggards because they respond so quickly and so fast. But in the US space, because we're traded on the OTC, that laggard action does still present itself as a potential opportunity. So that's nothing to do with the short term aside from the example, but just something to be aware of where if you see bullish USMJ news and you see the Canadian players on higher exchanges reacting to it, look real quick over to the USMJ names and see if we can see some laggard action and get in anticipating that the USMJ space will respond bullish as the Canadian space did, depending on what the news is, of course, but just a general little tip.
All right, Dan, great as usual. Thank you very much for joining us today.
See you next time.